Welcome back. It's good to see you.
Great to see you,
especially
Scott.
on this day. How are you?
Yeah.
What do you make of this?
Well, markets don't like uncertainty. They like visibility. They like moats. So markets are a little scared today. To me, it's an overreaction. I mean, Nvidia decline is the worst since March 2020, and we know that ended up being a huge opportunity for investors. So I think it's not a fun day, but I'd be looking at this as an opportunity.
I've been thinking about, the people who've been coming on today of all sort of professions, whether it's a strategist or investor or whatever, analyst, defending all this or saying it's overblown. How do we know? What if it's not? And if it isn't, what does that mean?
We don't know if it's overblown. You're right. But this is the nature of technology. I'd be personally surprised if Nvidia became Betamax in the past week. I mean, that's really would be the kind of change that would be required to really justify selling Nvidia here. And given, I think, the need for AI because of global labor shortage and Nvidia chip dominance is still strong, unless a new model emerges that doesn't require GPUs entirely, I'd say that markets just generally do fire-ready aim. I mean, I think it's hard to know, though.
I won't disagree with you on that. I mean, that's how the market tends to do that. But a lot of AI was sort of sold to investors on a hope and a dream, right? We haven't seen, in many cases, the ability yet to monetize all of this, or at least to have a sizable return on the investment that a lot of these hyperscalers are make tens of billions of dollars that they're pledging to spend. Doesn't that matter? I mean, what if some of that hope and dream just doesn't come to the degree that we thought, or we decide that it wasn't worth the money that we were willing to pay for it?
I mean, these are fair questions. If Nvidia was at 100 PE, I'd probably say that there's too much good news priced in, but the PE is around 30 times. I'm not sure that that's very demanding for investors, and if you look a couple years out, it's in the 20s. I don't think Nvidia is priced for perfection.
Is the market itself?
I don't think so. I mean, the 10-year now is backing off to 4.5, so you're still paying over 20 times for a 10-year bond. The median PE in the S&P is around 18 times.
Yeah, but I mean, because it's skewed, though, because of the mega caps, we're still like 22-ish times. So, earnings have to be really good from here on out, right? Don't tell me about multiple expansion again driving this train. You got to put up or shut up when it comes to earnings this period.
That's right. But, I've been researching companies since the early 90s, so over 34 years. I never found a PE for a high-quality company to be at 22 times, let's say for Mag 7, to be a demanding multiple. Again, I think if you're talking about price for perfection, it really has to be stocks where you have to back into the NPV of 100% earnings growth forever.
What happens if, at bare minimum, we are questioning NASDAQ stocks for the foreseeable future? Like, this doesn't feel like, tomorrow everything's going to be great kind of deal. So as long as we're doing that, is there enough momentum behind some of these other areas of the market that this market as a whole can be okay?
Well, today, market breadth's actually pretty good.
Yeah, financials, healthcare, staples, they're green. Dow's up, almost 200.
That's right. Even in NASDAQ, we have stocks that are up.
Apple, Uber, Meta, yeah.
And I think that year to date, we have 3 weeks in, and year to date, Bitcoin's outperforming, small caps outperforming financials. So I think the market does look pretty healthy. I would say it's also very encouraging that if we can close on the S&P above 5881 by the end of this week, it really solidifies that 2025 is going to be probably a double-digit gain year.
China has dropped a tactical nuke on the U.S. tech market, exposing the grifters within the space and tanking every stock that is even tangibly related to the AI sphere. And it did all that with its new AI model DeepSeek. This open-source AI model has thrust itself into the limelight seemingly overnight. Economically constructed at just $6 million with merely 2,000 Nvidia chips, it draws stark comparisons to the hefty investments like those behind OpenAI's ChatGPT. Let us take a deep dive into how China shook the U.S. market to its knees. Welcome back to Investocracy.
Let's talk about DeepSeek, because it is mind-blowing and it is shaking this entire industry to its core. The emergence of DeepSeek now putting pressure on the U.S. tech names We told you all about it last week in Davos. The buzz started growing about DeepSeek's latest AI model being more efficient while running on a lot less advanced Nvidia chips. Released last week, it's already being called what is a major breakthrough as the app shows its work, its reasoning. It answers users' prompts. I, by the way, was spent basically all weekend playing with it. It is the #1 app, I believe, on Apple right now. The product overtaking ChatGPT today as that on the App Store that way. DeepSeek, which was created by a Chinese hedge fund manager, also capturing the attention of leaders, as we mentioned at the World Economic Forum last week in Davos.
We should take the development out of China very, very seriously.
What we found is that DeepSeek, which is the leading Chinese AI lab, their model is actually the top performing, or roughly on par with the best American models.
If the United States can't lead in this technology, we're going to be in a very bad place geopolitically.
Now, you can take a look right now at the AI-related stocks. So Nvidia, ARM, AMD, Microsoft, Meta, interestingly, on that list, given it's open source. We got to talk about the open source, closed source bit of this as well. And
then it's a shocker to see Nvidia down by more than 12% right now. Absolutely.
And then you have global chip stocks also in the red across the board, ASML Holdings and others. There is the question, I will say, Alexander Wang made the point last week, and it's become sort of the question mark about all of this, which is, he suggested on our air that it is possible that they were using some of the highest performing NVIDIA chips, perhaps as many as 50,000 of them, to build this model. Now, and they weren't supposed to have those chips.
Right.
If
so
that's true,
not the size.
The dynamic is different. Yeah. If it's not true, then maybe all bets are off. It's possible, by the way, even if it is true, meaning even if they use those chips to create this, or at least partially to create this, it is still a significantly more efficient and better model. I think everybody agrees that right this moment, I mean, I don't know if did you get to play? It is mind-blowing.
It looks really great. I mean, it feels like it's open source, so people can test this out themselves.
But I can tell you all the tests that I do just to see whether I think the writing is better, whether I think that it can answer certain questions. Yeah. I mean, it was not only faster, it was more human. The reasoning is shocking. I mean, there were moments where I was like, "Oh my God, we are so much." You could feel the step change as a person. I will also say, as exciting as it was, there was an element where I became scared because I thought, I had the opportunity to talk to all these people last week, and they all said the future's here, and and then you sort of see it, and you go, "Oh, okay, I feel you," in a different sort of visceral way. So yes, I think this is all happening at a level that when you mark your sort of AI history timeline in life, I think this past week, today, and everything else will be on it.
Initially buoyed by extreme optimism, Nvidia's stock benefited from a bullish market eager to bet on U.S. technology giants. Yet the tides shifted dramatically with the unveiling of China's DeepSeek. Nvidia's prominent role in AI is now questioned by this economic production that claims efficiency without compromising capability. The tech world buzzed with mixed reactions, some questioning DeepSeek's allegiance, others marveling at its cost-effective achievements. But there is no more speculation or needless propaganda to push a blank narrative. We are seeing the truth play out in front of us, and it is not looking good for the tech market. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
I think Mark Andreessen put it really succinctly and really smartly when he said that this feels like the Sputnik moment for the AI race, where China is really stepping in. So not just what it can do, but what it means for American dominance in AI, what it means for the Chinese being able to step in, and to have the Chinese actually open sourcing it, meaning that is going to be what goes around the world, and to have the cost factors that go into this. Huge step up and change, and puts us a little bit on our back foot in trying to figure out what this means. Well, I actually wonder, Satya Nadella, would he tell you again today that he's still good for the $80 billion?
I think they still are good for the $80 billion. I think actually everybody's, I think the processing power issue is there's an element of which you're going to still have to have the current sort of efforts underway. I think the question longer term, I think it's a longer term question.
Can you recoup your investment? I mean, can you recoup your investment if that's the case?
Well, I think this is the big issue. And I think
who's going to pay for it if they get it?
At one point, and I don't know if we talked about it on Squawk or it might have been on Worldwide Exchange, one of the things that I was hearing that was fascinating out there is there were so many CEOs who were saying, you know what, I'm using OpenAI and I'm playing around with Anthropic to figure out what I need to do. And then, which is expensive for us, and we don't really love that. So we're playing around with what we need, and then we're trying to figure out how much of it we can replicate using Llama, which is the meta version of it, but it's open source and effectively, therefore, free.
Well, and you can have some control over it, too, as being open source. You can do things that you end up this way. You're not so beholden to OpenAI.
But to me, that's the issue. So here we have a situation where if people are already starting to move towards open source models, and I don't think that have been talked about publicly, really. Right. That's a whole kind of paradigm change.
Just back to the question on Microsoft. Microsoft shares down 6.8% this morning. Is there a point where Satya says, okay, maybe I'm not good for the $80 billion?
I don't know. I think he's still going to need this technology over the next 5 years. The question is, can he go, is he going to start using DeepSeek? By the way, there's a separate question, which is, if we think we have a problem with TikTok.
Oh, I thought this instantaneously.
Right. If we think we have a problem with TikTok, do we have a problem with this? Now, interestingly, this is an open source model.
You can take it and do your own stuff with it.
You can put it on your own.
So they're not
computers.
owning unless there's something in it that we don't understand.
Right. They talk about Project Texas with.
But I thought the same thing. On your own. TikTok looks like posers play compared to what this could potentially be. Although this is OpenAI, so you can take it and source it yourself and figure something out from it.
As Colombia's political spat with Trump introduces ripples of geopolitical uncertainty, prudent investors are torn between skepticism and strategic foresight. The shadow of potentially hefty 25% tariffs threatens neighboring economies, accentuating the need for investment discernment. Yet, despite these stumbling blocks, experts at the Aurora Report remind us that fortunes await those navigating these turbulent AI seas skillfully. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Anyway, it's fascinating. I think I don't know. We should call Satya, get him back, because the truth is he does need some form of AI for his Copilot and all of his other software.
Sure, but does it have to be
OpenAI?
And is there a way to do it more cheaply and not have to spend $80 billion?
I think the question is probably that over time they're going to have to spend less money. I don't know if you saw, he put out a tweet just overnight called, I didn't know about this, it's called the Jevons Paradox. And he links to a Wikipedia page, which I'll read to everybody if you'd like. In economics, the Jevons paradox, sometimes referred to as the Jevons effect, occurs when technological progress increases the efficiency with which a resource is used, reducing the amount of necessary for any one use. But the falling cost of use induces increased demand, enough that resources used is increased rather than reduced.
Could be, but does he still need to spend $80 billion to get to the same place? Could he spend $50 billion and still get the same out of it? If you can find ways to do this more cheaply, if the architecture structure is such that you can actually get more efficient with all of these things, maybe he doesn't have to spend the $80 billion to get to that point.
I think he may still need to, just because of the abundance of how much processing power. I mean, look, the guys who are, this DeepSeek, for the most part, people are now running on their own laptops and doing all sorts of things, so their computers are not overwhelmed. But if you decided you were doing this in the cloud, or there was going to be a cloud-based version of it, you'd still need a lot of processing power. I will say, just on top of his tweet, and this was just 5 hours ago, he says, the Jevons paradox strikes again. As AI gets more efficient and accessible, we will see its use skyrocket, turning it into a commodity.
Correct.
We just can't get enough of, though. And so they just can't get enough of, piece of it, may be the thing that hopefully helps them longer term, but still, I think it's a big question.
Right, and if you're doing it so that consumers are basically doing this for free, it's just who's paying the way on this?
As the market adjusts to the latest headlines, Nvidia's stock stands as both a mirror and a magnifying glass, reflecting the industry's flux while focusing on its future potential. So, as the conversations continue and positions waver, we ask, how do you view Nvidia's place in this unfolding AI saga? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.